morning, we've been looking ahead at what to expect for 2013. Now we're going to look back at the fourth quarter of 2012. Those fourth quarter numbers from a company, from a profit perspective, give us insight into what's ahead, including the outlook for jobs, especially the outlook for jobs. In this morning's U.S. Bank Economic 360, U.S. Bank investment analyst Jim Russell joins us to talk about whether there is growth in the post-fiscal cliff world. Happy New Year, Jim.
Happy New Year to you.
I've got to ask you, first of all, what do you think of this fiscal cliff agreement? Positive, negative, indifferent?
Maybe a little bit on the negative side, Brian. A couple of specifics there. Number one, we do think the deal that was reached literally on the first day of this year will prove to be a little bit of a headwind to growth this year for the United States. We were thinking the United States would grow at 3%. Probably will now grow at 2%. And here's the reason why. A lot of taxes were increased. $620 billion in tax increases, $15 billion in spending cuts. As you're probably aware by now, a lot of the spending decisions, which are important and politically difficult, have been pushed off for a couple of months. So we'll be hearing more about this in February for sure, but we got the bare minimum done, and we do think that's a little bit of a positive.
So one of the things that sets the tone for the new year is the fourth quarter numbers. So
Correct.
What are we expecting to hear on profitability? What are those numbers expected to tell us?
Brian, it's a good question. You'd mentioned jobs just a minute ago. This is why the fourth quarter numbers are so very important. The private sector right this minute is the only driver of jobs. The federal government, the state governments, the local governments are actually shedding jobs. For instance, we got information just last week, 155,000 jobs in the United States were formed. Unfortunately, 13,000 jobs were shed by the governments. We will see this every single month, where that is the private sector will be generating the jobs. Now, so what do we expect for the fourth quarter? What we think will be said, and earnings will be released probably mid-January or so through about the first couple of weeks in February, 3 to 4% profit growth over last year. For all of 2012, profit growth looked like 3.4%. That's a modest number. We think 2013 will prove to be a little bit better year, call it 6% profit growth. We think the unemployment rate moves from 7.8% nationally to something to the low sevens. Now, Cincinnati is doing much better than that. The unemployment rate in Cincinnati is 6.3%, again, well below 7.8% nationally. We think a lot of that strength will continue to be driven by manufacturing, and we see 2013 to be another good manufacturing year that certainly benefits folks here.
Yeah, the Courier's been reporting that manufacturing here is as strong as ever. Just back to the cliff agreement for a second, how do you think that figures into what we're likely to see in 2013?
We're going to get off to a very slow start in 2013. We think that the growth rate in the fourth quarter will prove to be, call it between 0.5% and 1%. Same for the first quarter of 2013, and then we ramp higher from here. We do think the financial markets could be a little bit bumpy as we hit that February time frame where the politicians again engage on raising the budget ceiling. Probably a topic for another day, but the spending cuts also dovetail in there. We're likely to see a lot of fur flying there and a lot of debate around some of those topics.
All right, Jim, we look forward to our weekly visits in 2013.
Yes, sir.
We appreciate you and U.S. Bank.
Thank you.